Hey everybody, Finance Farmer here. Today I wanted to share the 5 most powerful facts about investing I've learned throughout the years. Number 4 has completely changed the way I view money. Let's get into it. Fact number 1. Time erases risk. People think stocks are a gamble, but let's stretch out the clock. There's never been a single 20-year period in the S&P 500's history that's lost money. Not one, including windows that started right before the Great Depression, the dot-com crash, and 2008. Every single one ended positive. Breaking down the S&P 500 returns into smaller periods, you can see that 1 year, 74% of the time, you're ending positive. 5 years, 88%. 10 years, 94%. 15 years, 99%. 20 years, 100%. Never negative. This is really powerful. If you're willing to stick through the course, you will make returns. Fact number 2. The market's best days hide inside the worst ones. Everyone wants to sell when the market seems scary, and buy back in when it's safe, but here's why that destroys returns. Over the last 30 years, if you missed just the 10 best days in the market, your total return got cut in half. Missed the 30 best days, your return drops by 84%. And here's the kicker, 76% of the market's best days happen during a crash, or within the first 2 months of the recovery. The huge green days are hiding right next to the scary red ones. This is why it's important to never panic sell, or try to time the market. Stay invested, stay for the long term. Fact number 3. Saving for retirement might be closer to done than you think. Say you want 60 grand a year in today's money in retirement. We'll assume Social Security will cover about 25 of that. And hey, if Social Security isn't around when you retire, that's a whole nother video. So your investments only need to cover the rest, about 35 grand a year. With a 4% withdrawal, you need roughly 878,000 in today's dollars. Assuming 7% growth and 3% inflation, here's what you need invested today to coast all the way there. At 20, 158K. At 25, 191K. At 30, 231K. At 35, 280K. These numbers are achievable. Just as a heads up, because of inflation, your account will actually read a few million by 65, but that's the exact same spending power as 878 grand today. Fact number 4. Even the 1929 crash couldn't beat buying every month. Worst timing in history. You started investing at the literal peak, September 1929, 1 month before the market falls almost 90%. So how badly did you actually get hurt? Way less than you've been told. You've heard it takes 25 years to recover. That's a myth. It only counts the Dow's price. 2 things fix it. 1, dividends. Dividends were huge back then, and you're reinvesting them. 2, deflation. Prices were actually falling, so every dollar you had bought more. Count those in, and even a lump sum dropped at the absolute top was back to break even by about 1936. Roughly 7 years, not 25. From the 1932 bottom, just 4.5. Here's the part that really matters. Even without deflation, no fancy adjustments, just dollar cost averaging every month, you still came out ahead. Just $1 a month straight through the crash over those 10 years, you put in 119 bucks and you walked away with 156, a profit through the single worst decade in the stock market history. And the reason is simple. While everyone else was panic selling, your money was quietly gathering more shares at a dirt cheap price, dragging your average price so low that the recovery actually paid you. That's the worst case. That's exactly why a dollar cost average, no matter what the market is doing. Fact number 5. Starting early is basically a cheat code. 2 people. The first invests 500 bucks a month from 18 to 28, then stops. Never puts in another dollar. The second starts at 28 and invests that same 500 a month all the way to 65. The first person put in about 60 grand. The second put in 222 grand, almost 4 times as much. So who ends up with more at 65? They basically tie, around $1 million each. The person who quits at 28 wins with a quarter of the money in, because their money had more time to grow. That's it. Time does the heavy lifting, not the size of your paycheck. I hope you found these 5 facts interesting and helpful on your own investment journey. This is not financial advice, I'm just a guy on YouTube. It definitely helped me when I was starting. If you enjoyed this video, please leave a like, please subscribe, stay growing, stay happy, and I'll see you next week.